Hello and welcome back to Stock Market Weekly. I am your host, Evan Medeiros. This is the show where we take all of this week's important financial market moves and break it down through the lens of technical analysis. Hope you're doing well out there. Every Friday we publish the show. Thank you so much for tuning in and spending some time with me. Let's get into the headlines here. NVIDIA, it's got to be number one. This is what the market was waiting on and did not disappoint. I mean, this just company continues to fire on all cylinders here. $26 billion in revenue, over $6 of EPS now, and they announced a stock split. Market loved it. New all-time highs for the stock. Third largest company in the world now. Just an absolute blockbuster story here for the ages, this come up of NVIDIA. And so the good times continue to roll, not so much for a lot of other stocks this week, but we're going to talk about that a little bit later. We did not get any follow through to the Thursday selling. So you had this weird, very strange market, right? We had NVIDIA announcing earnings the night before. So on Thursday, everything started the day off pretty happy and rosy and green. And by the end of it, we saw basically a flip, and we saw selling pressure basically build throughout the market, not for NVIDIA, but for pretty much everything else. But Friday, we kind of buoyed back, we rebounded. And so we're left with an interesting sort of start and setup for next week. Lightest volume week of the year. That's, again, signs of the time here. This is pretty seasonally on point in terms of when volume starts to drop off. No more talk on meme stocks. That was basically, you know, a big kind of flare up for about a week or so, and now something to keep on the back burner. Bitcoin also retesting 70,000 earlier in the week and settling a little bit below it. And we did get more crypto bullish news here with the Ethereum ETF getting approved. A quick 180 there on lots of the speculation on whether or not it would make it or not. It did. So lots to talk about. Stick around. Okay, we've got some charts in front of us. TC2000, that is a charting platform we're using throughout this video. It's a charting platform that we support here at the Trade Risk. I pretty much work with traders every day on this platform, building tools, indicators, scans, custom stock scans, anything that you're looking to do to get a little bit more out of this platform, programming wise or customization wise. Check out our website, thetraderisk.com, see what we have available, and we can very likely help you with TC2000. Now, let's get to the data here. So 1 week returns, very mixed. We've got the Dow Jones was finished lower by 2.3%. Russell 2000 was down 1.25%. Then you had the Nasdaq 100 up almost 1.5%. So that's a very wide range. Depending on what stocks you own this week, you felt a very different set of emotions here finishing out the week, because there were winners and there were losers. If we look at volatility, you can see we kind of still managed to unwind a little bit, and that's despite Thursday, the VIX kind of jumping a couple of points and then just sort of, you know, deflating again on Friday. But look at this VIX under 12, 11.92, some of the lowest readings now in a handful of years. Now, if we go to the sector overview here, this is where you can certainly see mostly red, right? So we had, again, this kind of tale of two markets this week. You had NVIDIA and the related stocks that sort of, you know, are riding that wave that were working this week, fewer of those, and you're left with 8 sectors here in the red. So you had technology up 1.5%, 1.6%, communication services up nicely as well. Everything else was a loser. If we look at the bottom here, energy, real estate, and financials, the hardest hit here, down 2 to 3.5, almost 4%. So definitely a tail and a mixed market here. If we take a look, though, at sector trends, despite some of that weakness that we saw, we didn't really get any change of trend here in terms of the the trend filter here that we're looking at, our smart trend filter, you basically had consumer discretionary as kind of the standout. You started the week off on a positive note, and you ended up flipping and printing essentially a sell signal here, or a reversal in this daily trend. So besides consumer discretionary, it was the only one that really got hit here. Energy had already been pretty in a downtrend, and everything else is kind of, just chugging along still in a bullish state, or it's choppy right now in like industrials, which is more printing this yellow dot right here. So certainly something to pay attention to, but right now this pullback that we saw at least on Thursday seems pretty contained. Now, speaking of that, if we take a look here at market breadth, again, you could see this week we did get more stocks making 52-week highs than making 52-week lows. That's a good thing. We did see that ratio kind of slim down a little bit. So you saw particularly Wednesday and Thursday a dry up in the number of stocks hitting 52-week highs. So something we're going to keep our eye on. Again, not changing the bigger trajectory at this time. More selling pressure, a big down week next week. That could certainly change the tune here. But for now, buyers still in control. Now, if we move on to our friends over at Investors Business Daily, they are a sponsor of this show, so thank you to them. This is their IBD 50 list, the top 10 of their IBD 50, and you can see pretty strong week from most of their holdings here, certainly over the last 1 month. Very strong double-digit gains in all these stocks. Their top-rated stock up 14% right now, CLS, and right down this list, you can check that out. So there's a link in the description of this video. You can get access yourself to their IBD 50 list, updates pretty much every day. And you can have real-time access to that. Support the show, support IBD with a link in the description. Let's move on to commodities here now. You can see DBA at the top of the list, very strong rebound. So DBA really got kind of hammered over the last few weeks, and now you can see it's trying to get its act together, trying to get back in that upswing mode. So nice to see they're up 5%. Bitcoin, like we talked about at the top of the show, up 3% this week. That's the IBIT ETF. And then we saw the dollar index also rallying this week as well. Everything else in commodities land was down this week. Natural gas saw some heavy volume and some turbulence per usual, but a little bit of a reversal there. Oil down, gold down, silver down. A nice breakout in silver we talked about last week. Well, you maybe get that pullback opportunity here in some of those precious metals, and copper was down as well. If we take a look here at Treasury yields, not a huge move, but a move in the opposite direction here. So you basically got yields rising across the maturity. On that short end here, particularly the 5-year starting to inch back up. 10 years still kind of making up its mind. Take a look at this big trend line that's been in place here since the January 2024 lows. You can see it's broke down below it at the middle of May, middle of May, and now it's trying to get back and test this area here. So it'll certainly be interesting to see the direction here as rates sort of pick their next move. But for now, a little bit of a counter trend kind of rally there in mode. So let's take a look at some price action here. Let's take a look at the S&P 500. This is the weekly chart here. You can see a little bit ominous. We basically, again, started the week where we opened it. We tried to rally, tried to sell off, and we basically just said, you know what, let's finish this where we started. And going into the long weekend here at 5,300 at pretty much weekly all-time closing highs, though. So as much of, in a non-move this week was, it certainly came with some volatility, and it does now set up this new range that we've developed here in the S&P 500. So if we look here, we broke out just a couple weeks ago over the old March highs, and we ran a little bit, but didn't get too far right before we kind of got in consolidation mode. And right now, when we look here at just this action, we saw a big and quick move off of these April lows. So the market, when I say market S&P 500 here, rallied 7% in pretty much 3 or so weeks. And so the fact that we're at least now digesting and consolidating, I would say, is a pretty healthy and constructive next step in this phase. Now, the question is going to be, does this turn into some type of distribution top here, where sellers are basically getting more aggressive and we eventually kind of fall back, fail, and reject and come back down below the March lows, right? That would be the bearish development here, is the fact if the market continues to consolidate and then ends up rolling over. Now, we don't have that evidence yet. We still have, again, relatively constructive bullish evidence there in terms of market breadth. Sectors this week, I mean, again, things got shaken up, so it's not all roses and sunshine here. There is some mixed signals, but generally speaking, I think this is still a glass half full market that you have to give the buyers credit for right now until proven otherwise. And so I thought Friday would have set the tone for that otherwise, right? If we saw confirmation selling, if we saw a follow through kind of distribution day here on Friday, then I would have been a lot more kind of glass half empty, pessimistic coming into this weekend video. If we saw the big bearish engulfing bar Thursday, followed by follow through and a failure of these March highs to hold above them, that to me would have been the short-term cautionary sign where we need to pump the brakes and be a little more cautious. But we didn't get that. We got an inside session here on Friday, which sets us up for let's wait and see. It's a long weekend. We're going to come back Tuesday. How does the market follow this up? Okay, that's the big question now. We've got a reactionary day Thursday, inside day Friday. What comes next? I think that's going to be the important question. For now, we've got a nice tight range develop here, and it's going to be summertime trading. So the market, the character of the market changes during these times. When volume gets very light, you tend to get the bigger moves like we saw on Thursday. You'll get a very exaggerated 1 or 2 day move, and then usually it's just it kind of just stops. It slows down, right? And that can happen in both directions. To the upside, you can get a big pop, squeeze higher, and then suddenly the market just dies off basically and goes sideways with very little volume until the next sort of directional move. So you got a little bit of an adjustments here for the short-term traders, but volume was light this week, and we're going to continue to see how this all follows up. If we take a look here at the Nasdaq 100, notice you've got slightly more of an upward drift, and of course that's the tech-heavy nature of the Nasdaq 100 here. So the S&P 500 has gone totally sideways, just over its March highs, and you can see the Qs are just trying to inch higher here a little bit. They still had a very loud sort of bearish engulfing day on Thursday, but once again, no follow through. And in fact, on Friday, you were managed to actually reclaim the majority of, I guess all of the selling pressure. You didn't get to the highs, the open price of Thursday, but certainly made it past Wednesday's close. So made more follow through progress here in the Qs. Again, that's because the tech heavy nature of NVIDIA and everything else that sort of rode in the shadow there. Now, the Russell 2000, I think, certainly saw a little bit more of that brunt force selling here, particularly Thursday here was down 1.64%. And you can see, again, we didn't get any follow through, and you are getting, again, just more consolidation taking place in this range. This has been our call now for quite some time that the Russell 2000 is going to spend a lot of time in this range, making up its mind, firming up, or firming up to the downside, right? Where sellers are taking control. We don't know which way this breaks right now. We do like the evidence underneath the hood. We like kind of the, the breadth that's kind of hanging in there right now. So we are leaning towards a bullish breakout eventually, but we're not there yet, and we can certainly change our mind. The only call that we have right now is that we're going to spend time between 190 and 210, for the foreseeable future. So the Russell 2000 doing that. Again, volume pretty light here, all things considered. So that's really the read there on the markets. I think the S&P 500 has the most actionable sort of range to pay attention to after going tight and sideways there for about 6 or so days. Let's take a look at the VIX once again here. As we talked about at the top of the show, under 12, 11.93. We had this flare up on Thursday where the VIX jumped Well, I guess it only ended up jumping a point because it gapped down so much to start off the session, got as high as about 13, and then just kind of faded off. So that's kind of what we're talking about in this summertime trading environment. And the VIX right now is very, very complacent down here. But like we said, last week, complacent does not necessarily mean we need to be rushing out to it's I guess the old saying is never short a dull market, and I think this is gonna kind of be that type of environment, but let's see what happens. Let's move on to China here. So we haven't talked about China in a week or two. We did talk about China when it was starting to move here on that initial breakout a few weeks ago, and now you can see it's pulling back. It's pulling back aggressively. This was a big week down for the K-Web here, down 7.38%. But if you do think China has bottomed here, if you think this is a longer term bottom, something to pay attention to, after getting a little bit of that momentum coming out. So I'll let you go through some of those individual names, might be a little more actionable. Let's talk about Bitcoin here. So Bitcoin, as we talked about at the top here, retesting this 70K area. This isn't quite the all-time highs, but it's kind of at that upper end, that March, resistance area here into the beginning of April. We, really kind of aggressively pushed above it here on the news that, or speculation that the Ethereum ETF would likely be approved on Thursday, and it ultimately was. We did see a little bit of a pullback here down to about 66, and it's starting to, stabilize again. So Bitcoin is certainly firming up here. It's been consolidating since March. I think the consolidation's been pretty darn healthy, all things considered. Still like it, still have a position. Our trading system, Galahad, this is the thing with longer term trend following systems like we're running now with Galahad. You have to be able to endure the pullback, and April was a tough pullback here. Galahad has been in Bitcoin since basically the launch here of IBIT, since February. I think the initialization was around 24 and change. So look, it's been a heck of a run to the upside, but and it did scale some profits along the way, but it did just endure, from the highs here, from its high water mark. This was a 23% correction, so it had to sit through it, and that's the difficult part about trend following, and so a long-term trend following anyway. So we'll see. I still like the structure here, still have a position, and we'll see how that follows up. So that is kind of everything I want to talk about on the majors. Let's talk quickly about just a few individual stocks. We'll try and wrap it up early here. This is our large cap just scan here, screen where it's looking for the biggest moving, largest companies of the week. And we've got three names showing up. We'll start it off with NVIDIA, as we know. Of course, earnings were out, 15% up. This is the weekly chart now. Again, third largest company now in the world. Daily chart, you see you've got this big open gap here from Thursday. This was the gap up off earnings, and continues to close at all-time highs here. So congrats to the buyers. Again, it's a real tough chase at this point, but momentum has got it, and it is pushing higher. I would certainly not want to be short it, but I don't have any active long position in this right now. So congrats to those involved. We had a couple of other big winners this week. So Moderna was up on the week 25%. So that was a pretty big move here. This is well off of its all-time highs, but it is pushing up to about 52-week highs right now. So again, really tough chase. This thing's been up basically 13 days in a row or some crazy number like that. So again, don't advocate chasing it, but certainly saw a nice big move. Coinbase, this is more actionable. Now, this was showing up on the screen here this week, up 15%. I mean, this looks a lot more constructive. And again, this is obviously Bitcoin, well, I should say crypto, not just Bitcoin. Exchange here, financial services, however you'd like to think of it. And you can see this has been consolidating very constructively here. It's very similar to the IBIT or the Bitcoin spot price. It topped out in basically mid-March. It's been pulling back, consolidating. It's in this nice uptrend, and now it looks like it's trying to get going here on slightly higher volume. So I like the look of coin. Don't own any at this time, but have in the past. So looks pretty interesting there. Last but not least, on the downside, we had Workday. This was down 14.5%. You can see a big gap down here on Friday off earnings. And again, structure here is a little bit different. It's not trading at all-time highs. It did briefly get back to them back in February of this year, so earlier in this year. And right now it is at about a 30% drawdown. So this one is certainly feeling some pain. Don't really have any other big insights or comments to say about it, except for that is a hell of a lot of volume that came in on Friday. Some of the heaviest volume we've seen the stock trade almost ever, or certainly going back to 2019. So that's what I got today. Going to try and keep it a little bit short. Summertime trading. These videos might go a little bit shorter because, quite frankly, it's probably going to be fairly dull out there. At least that's my expectations. Famous last words. Maybe things are going to be cooking around the corner, but we shall see. So that's it for me. Thanks for tuning in. Don't forget to check out those links in the description of the video. And I hope you enjoy a long weekend and get some time outside and with friends and family. So take care, and we'll see you in the next video update.